So today we're going to have a little bit of a catch up with what we've been missing the last few days. The last few days I've not been able to make a video, so I'm going to do this video today to catch up on all the news stories that we missed, because there was a lot, and try to squeeze that all into one video and spend a minute or two on all the stories that happened towards the back end of the week, because there was a lot. One of them being one stock that I own, and what I would say is the worst stock that I own. They currently brought an update out, and we'll talk about that and also share, hopefully from my point of view, a mistake that I made really with this business, and so this business is not really performing that well, and hopefully it kind of helps you guys as well, and talk about that investment that hasn't really at the moment worked out for me. But yeah, there's a lot to talk about, so we'll take a look at some of the stuff that's been happening this week and some of the stuff that's coming up next week as well, because it's another big week with us moving into earnings season this week as well. So the stock market itself was an ugly week last week. We did end up being on the S&P down 1.7%. That was really helped with Friday. If it wasn't for Friday, we would have actually been in the positive, believe it or not. It feels like it's been more than that. It feels like we've had such a bad week that if it wasn't for Friday, it still would have been a bad week. But yeah, that's what just happens, because we so often recently we've just been hit with them really negative sell-offs on Friday. It's been a really regular thing going into that weekend, and it seems like as well, the particular thing that I noticed from this week is there was a lot more growth stocks joining in. The last few weeks where we've had the indexes have a bit of a bad period of time, as you can see here in the last month, the S&P is down 7%. It seems like a lot of those small caps and growth stocks have actually been holding up, not too bad, but it felt like this week a lot of them small caps and growth stocks carried on joining back in that dip, and I noticed for the first time for a while a few of my small caps and growth stocks that have been performing quite well were actually dragged down through last week. And same with the Nasdaq. When you look into the Nasdaq as well, in the last 5 days, you can see this was actually down a lot more, down 3%. So, you know, with the Nasdaq being down that much, you can expect some of those small caps growth stocks to be hit really hard in that period of time. And then on Friday, a massive, that's 3% down on the Friday. So once again, you can see a lot of that negativity coming from that Friday session. Now, first of all, one stock that came out with some interesting news with the week just gone was Barratt Developments, a stock that I own, a house builder that I own. So we knew that the house builders at the moment are going to have some negative information that comes in there. It's, you know, we can see when we look at them stocks, there's been a lot of negativity priced in, and you can see here really since that December time, you know, a lot of these house builders are down over 50%. Barratt Developments is no exception, as you can see here. And we actually got a bit of a trading update from Barratt Developments and how things are going, and in that trading update it was clear once again there was a mention of the slowdown that's going on. We knew there was going to be a slowdown, and we know that that's the slowdown that's being priced in at the moment. Now on the day when the actual when it actually came out, the stock actually dipped over like 8%. I think it was up to 12% at one point. We had the dip. Now the really interesting thing is that they came out with a bit of a cut in the profit, which we did expect. However, it wasn't as bad as what I think that a lot of people was thinking. And initially we had a bit of a negative reaction on that share price. But the really positive thing is that we saw buyers come into Barratt Developments, and it actually finished up on the week as well. So that was really positive to see that negativity there. It did have a bit of an impact on the share price, but then buyers came in. So it seems like at the moment we might have hit a bit of a spot here where everything's priced into the housing market, where there's all that negativity priced in now. So I thought that was really interesting to see Barratt Developments have a bounce off a pretty horrible trading update. And seeing that it looks like a lot of that negativity, a lot of that slowdown is now priced in for Barratt Developments, and it should do at some point, because you can see here it's one of those stocks, and add it to the list, and one of those stocks that is now priced below CV levels, which is absolutely crazy. Going on to some UK news as well, obviously there was a change in the Chancellor, and Jeremy Hunt has stepped in now as the Chancellor. It seemed like it was pretty well received, I would say, from the markets, up until the point where then Liz Truss went actually to go speak, and when she did, you can see the actual tumble in the market on the FTSE 250 here. So a bit of mixed reviews there about the change in the Chancellor there at the moment. Going on to JP Morgan, JP Morgan actually brought out their earnings. They were pretty solid earnings. A company at the moment that's obviously benefiting from them higher interest rates. It's quite interesting to see that. It's good to be looking at who's going to benefit from these higher interest rates at the moment, and clearly JP Morgan were one of those. There was a jump in the share price on the day of their earnings, and when you look at the dividend yield here, P ratio, you know, probably I would say the best bank to be probably owning on the US side of it. probably a little bit of an opportunity here at the moment. So yeah, interested to see their results were really strong and benefiting from them interest rates, and maybe an opportunity here for a few people. The next one was Beyond Meat. So personally for me, this is one that I currently own, and without doubt this is the worst stock that I currently own in my portfolio. This is the one stock that I look in my portfolio and I go, they are doing a horrible job at the moment. And this is one of those where, unfortunately, you know, there's going to be a few situations where you do get some stocks wrong and they don't play out to be that well. And at the moment, it's very easy to get confused because there'll be some stocks that are having the share price go down like this. However, the fundamentals are going like this, and people at the moment are getting share prices mixed up with companies performing, you know, badly, when in fact there's actually a few doing this when the share price is doing this, and those are the opportunities you want to be capitalizing on right now, and those are the ones that I'm trying to capitalize on. Unfortunately, something like this one at the moment, the share price is going like this because the financial performance is going like this. This has been a stock that has massively financially underperformed. Me as an investor in this business has massively underperformed my expectations, which was a bit disappointing. And this comes off what was a year ago a business that really looked like they were moving back into a good direction. Personally for me, I think the product's really good, and if we look at the results which were here on August the 5th 2021 from last summer, you'll be able to see that the results were actually really impressive. They grew 32% year over year, which is obviously we were trying to target maybe a little bit higher than that, but still pretty impressive growth here. The food service channel was growing at 218%, and the gross profit as well was 47 million, which was really good gross margins for a food product at 31%. The net losses as well were pretty small as well, so we were hoping that if they carry on going up for scale, reinvest into the company, growth keeps coming on and they keep mass producing, then that's going to help them go to profitability. Everything looked fantastic with the business, from moving into a gross profit point of view to a revenue point of view, and we thought, okay, 12 months time we're going to start having a lot of these partnerships come in, the Pepsi deal, and that's going to help as well drive the food service part of the business up, the retail part of the business up as well, with some of the other deals like the McDonald's deal as well. Unfortunately, that hasn't happened, and what happened is Beyond Meat came out and cut jobs. They said they were going to cut their workforce by around about 20%, which, funny enough, in the last earnings, they said they were going to cut the workforce and they were doing it by 4%. Last earnings was like, it was the most pathetic cut ever, like 4% of the workforce. When you look at the financials of the business, it was obvious it was never going to be a big enough cut. So now they finally come out with more of a serious number. Don't know why it took them that long to do it. And then also in that period of time, they also came down with a revenue downgrade as well, which they snuck in quite well in this report here, and basically means they're now going to be flat on revenue through this period of time as well. And it's just been a horrible couple of months, really, a horrible year really for this company at the moment, as they have massively killed off their gross margins by doing deals and products that hasn't benefited them at all. Obviously affected the revenue at the moment, and it's just a very bad year for this business, where I think they've seriously got to have a look at the management team, and probably, in my opinion, the best thing now would be to get a complete new management team, or at least give an explanation of how things have gone so badly wrong in this last 12 months. So that was a not very good day for Beyond Meat, and you can see that on the share price. It was down 9%. It's now under $1 billion market cap business at the moment, and yeah, hopefully they can turn it around now, because in my opinion, still the product is very, very good. There's just been some awful management decisions in the last 12 months, which should be questioned, why these decisions were made. So that was some bad news there. And then we move on to this week. This week we start to enter the peak of earnings season, and we have the likes of Netflix that report earnings. Obviously have to well, they had the last earnings, but the earnings before is when we had the big drop on Netflix. So it'll be interesting to see how they're doing, and the recovery and the repricing structure and the adverts coming in there. So Netflix will be a big one on Tuesday that the markets are looking at. There's also a couple of bank earnings in here. There's Snapchat on the Thursday, which will be very important for Meta and also for Pinterest. That will probably move Pinterest and Meta earnings. So I'll be watching Snapchat to see what kind of numbers they come out with, because that will probably move the market and them two stocks in particular. And another big one on Wednesday, which is going to be Tesla. Now, Tesla was a stock on Friday as well that actually had a really bad day. This was actually down 7% on Friday. And in fact, it's actually been a really bad month for Tesla. They're down 32% in 1 month. So, yeah, I mean, Tesla was a stock that was holding up okay through this period of time, but now this is having a massive drop off at the moment and lost a lot of valuation, pushing towards a 600 billion market cap, and it's actually trading around 73 times earnings at the moment, which is quite interesting. I feel like I'm looking at Tesla at the moment, and I've been put off with the valuation a little bit with Tesla, just because I feel like they've already priced in a lot of mass production now. It's whether or not they can deliver on the other parts of the business, like the autonomous driving, the Cybertruck, the semi-truck, and move into them sort of spaces and basically repeat what they've done in them sort of spaces. Yet to be seen if they're going to execute. But I've got to say now, I'm looking at the valuation dropping and I'm looking at the reward, and I think like even this year they're going to walk away with like, you know, very good amounts of growth. Next year still good amounts of growth. Still got, you know, many things in the pipe work. And I've got to say, Tesla at $204, at 73 times earnings. I said that if it gets to 180, I'm tempted, but at 204, I don't think it's too bad either as well. So I'm going to see what Tesla come out with their earnings next week. But I've got to say, Tesla is very much getting back to my buying range. Obviously, I've owned Tesla like 2018, 2019. 2020 and made good money on it. That point of view, 2021 I owned Tesla as well, made good money from Tesla in 2021. So yeah, I've got a history of owning it, and I've got to say that valuation for me is really starting to come down, where it might be where I do really consider it, and I think earnings could be key, and listening what's going on in earnings, and I'll have a think about it. So yeah, that's some things to be watching out for next week anyway. So I hope you enjoyed the video. If you could hit the like button if you subscribed, and I'll catch you in a bit.